that's going to push the prices eventually higher. I
Mm-hmm.
think there's so many variables, right? But one variable with oil is as the economies of the world start moving towards recession, there's less and less need for oil too, and so that drives down the factor. But one of the biggest countries that need oil is China, and China's just getting out of its COVID restrictions, and eventually it's going to start needing more oil, and that's going to increase the oil need of the world at that point. And then there's possibility of conflict in the Middle East. Anytime there's any conflict in the Middle East, that drives up oil prices, and so that's a possibility. And whenever you look at prices in general, it's predictive. It's like everybody's looking at the price and they're trying to predict it out,
Mm-hmm.
and that's what you're looking at right now. And so it's the fear greed factor is just the number you're looking at. That's the way I see it.
Yeah. I also think it's kind of interesting too, that you mentioned China, because so far it seems in this whole conflict that China and Russia are at least in the same agreement that Russia's not really doing anything wrong. China kind of backs them up on that. And so
But
that you mentioned China's, going to need a lot of oil here pretty soon. Russia's going to be their main supply. So I'm curious to see how that plays out.
yeah, that's a good question because it's not just that Russia has the oil for China, but can they deliver it?
True.
For Europe, they have all the pipelines and everything set up, and it's just flowing right in. But of course, that's being cut off now because they're not paying in rubles. Um, so 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 now, can they shift it over to China? And if so, then China will start, you know, taking advantage of that. And I think, the main thing is everybody's trying to be the big cat on top, right? And right now, America is, and China wants to be the big dog, and so they're going to support Russia because Russia's kind of going up against us. It's just trying to be the biggest, bully of the world,
Yeah.
right?
It's one big pissing contest.
But that move over the last week in XLV is kind of sketchy though, right? There was a lot of red volume on the days it went down. Um, Even the 7 day volume averages started picking up. Just looking at the short term moves, right? I think at least for a week, it's like 5, 6, 7, 8 days, 8 trading days. It's been trading downwards. So there is definitely some kind of profit taking because if you look at the run up for XLE for the year, that is crazy.
Mm-hmm.
That was like almost double its price. So there are people taking some profit at this level. Um,
Yeah,
when I'm looking at the volume profile as well in the 6 month chart, right now the price is trading below the line of control. It's at 76. The price is at 73. So unless it's going the demand. So the Russian thing for me is kind of sketchy because they didn't switch off completely, and not like they were supplying completely before that either. So they have been cutting back slowly, or I think in phases, and this is their next phase of cutback. So. How much it's going to impact the oil supply is yet to be seen because Biden is also in Saudi with meeting with the prince trying to get OPEC to release some oil in the market. So, lot like Thomas said, things there's a lot of different factors influencing how the futures of crude oil futures are going to move. At least, actually, didn't look at crude oil futures. Let's see.
yeah. And when I look at the technical analysis, the main thing I see is it XLE broke through the 20, which before it was pretty much staying right there at the 20 MA, and it would drop down to the 20 MA and then go back up. Worst case, it would go down to the 50 and bounce back up. So it bounced right through both of those, and now it's slamming through the 100, moving down towards the 200 MA. So it is breaking a lot of those supports that,
Yep.
that we've seen before. producers like Exxon, Mobil, and it's like they're overvalued right now too,
Mm-hmm.
according to a lot of the charts that I look at. But I don't know. I still feel like we're moving towards a recession, and 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 I don't think the Fed has it is going to control inflation like it should, because if it does, it'll just be a complete disaster. And if we don't control inflation, especially commodities and oil, continue to move up. So that's why I'm still on the bullish side of it, is more the macro fundamentals.
Beyond that, over a longer period of time, they can still move up.
Yeah,
Yeah.
I think so. I think it'll at least go back and challenge that. Well, some predictors are saying, I think, gosh, who was it? JP Morgan or someone was saying it's going to go up to $140 a barrel crude oil. I think it's around 110 right now.
That's interesting though that the price of the barrels are still going up, but XLE as a result is, I mean, falling significantly because of it.
Yeah, I'm looking into putting a position into USO, um, which is more just the actual commodities, the oil commodities, instead of investing in the companies, which
Mm.
is the United States Oil Fund. But you can see it still took a little hit, but it seems like it's staying with support at the 50 moving average.
Yeah, it looks like it hasn't broken through quite yet. It's still hovering.
And it has a lot of volume, so I think that's a good one to watch also, the USO.
Yeah.
Are you guys looking at the league diagonal or something in XLE?
Yeah, I was looking at yeah, at
Oh,
daily.
USO.
USO, yeah.
I think.
Yeah, go die.
Oh, I was gonna say. I think it might be a decent idea or there's potential there at least on XLE to throw in a trade. I mean, maybe a bearish play like a put diagonal or something. Just kind of thinking out loud
Yeah,
there.
uh, yeah, but I'm trying to figure out a good diagonal myself on IWMs. I can't get the formulas right. I know I'm making a mistake somewhere.
Yeah,
I
like
got the structure down. The adjusted lead basis and critical strike formula is different, apparently. That's with what Eric said, but I don't know where I can go find those formulas.
yeah, I don't know either. I've been trying to work on that as well because like you, I mean, I found a potential trade and I believe that I have it structured right, but I can't figure out the equation for the leap basis or the critical strike either. And I've tried to look and look and I can't find it yet.
Yeah, and although for XLE, I was going to trade it for diagonal. I'm looking at just the charts. That 6 month, 1 year, 3 month, everything is uptrending. So, and
Mm,
all the averages are lined up in a way where 9 is over the 20 year, over the 150. So it's still kind of in the bullish trend. Um, I don't know. Put diagonal on this might be a little tricky though. Plus the IV percentile is at 99. That's great.
yeah.
If you but if you're going long IV, there's no room for it to expand at all.
Yeah.
99. That's pretty.
Well, that just kind of backs Todd's point though. I mean, being bullish on XLE, if all things considered, it's still in an uptrend. And I mean, even looking at the volume profile, like we broke through the first shelf on the top, but there's another smaller shelf just underneath that at the 68 level.
Yep.
And I mean, that could be another potential area of support, on the way down. And if it hits that, then it may just hover around there and it may not break through that area and then go back up. So it's yeah.
Yeah,
This is
that's exactly it. I'm sorry, go ahead, Todd.
no, I'm done. Go ahead.
Yeah, 68.31, that looks like it, but to get there, it has to break through the 200-day, 150-day moving average and break through the -2 linear regression channel. So that will be interesting. If it does that, I'm curious to see if there'll be more volume supporting that move downwards. Then it's a free fall after that. The next level is down at 49, so it can go all the way down to at least 54. I'm thinking. There's no gap. There's a whole big range of gap between 68 and 57. So $10 move. Ooh.
Yeah. That'll be fun to see. So
Uh, so let me share what I've been working on in IWL. Let's see. I'm sharing the screen. It'll work. So I guess in here, can you hear me?
Yes.
yeah.
Okay, perfect. So a typical diagonal is like this, right? So when price of the stock is moving up, you want it to give you profit on the way up. So this is your call diagonal. So I'm trying to figure out a good diagonal. So this way, so it's flipped over to the left side, and there's no what do you call it, downside risk where it starts bleeding out money, and my max profit is somewhere where my short call is. So I'm looking through these different strikes here. For my long put, 80 deltas, 83, 81, 86, or 85 delta. And man, it's super expensive, right? IWM is at 160 something. Yeah, 165. So I'm not able to go too far out. I think this is about 90 days. If I'm looking at the option chains, 16 September, yeah, so 89 days. This is 100 days. If I go too far out, the liquidity is kind of drying out, and um, see, there's no open interest at all in these. Nothing here either.
So you really can't do a year leap then with that.
No, I'll have to
I
go way like 362 maybe, even
I I,
then.
I I think I remember when I was listening to one of Eric's videos undoing the bear diagonals that he only went like 90 days or just a little. I think that was like i- one of his main rules with the bear was around 90 days.
That makes sense, right? It's cheaper too. It works out good for my. I'm trying to trade, even though this is paper trading. I'm trying to trade it like a real account,
Yeah.
but there's enough volume in here in this region to go for a 90-day trade. So if I'm looking at that, I would choose what's that? 30th September 190 put. Sorry, I'm looking on the call side. I should be looking down here. 190 put. So some 83 delta. There's good open interest here, 26,000. So and there's enough liquidity here to get good price. So 190 put open long and 160 short at 8 July. That's 2 weeks from now. From right, 8 July. Yeah, 19 days. So perfectly exposed to theta decay. Not so much exposed to theta decay here. So the chart, the risk profile comes up like this. This is still 1-to-1. I haven't changed any ratios here. But when I pulled up my Excel spreadsheet trying to check the expectancy on there, if I
Nice.
use the
leap for. Oh, thank you. I've been actually this turned out to be pretty useful, Ty.
Ah, hey,
It's a lot
That's
of
so
pain
cool.
it is very cool.
yeah. I don't know. I still need to make improvements on it, but it's helpful at least to quickly gauge where I need to take profit and loss. So if I'm looking at the leap that's expiring 9:30, and managing it at this is all at 60% profit, and this is 3 times the credit receipt. So 60 maximum profit is 802. 60% profit would be 481, and the chance of that happening is close to 50%. So this is a pretty good trade. The expectancy comes out to 104. Um, over if I manage it at that 60% and 3 times the credit receipt. So that is what, yeah, 104 right here. But look, you can go way up to 80% because it's the chance of that happening is 43 using the probability analysis um, bell curve here. So I might just try taking profit at 70 instead of the standard 60 and see if I can make 20 bucks more over the 104 price. But yeah, so all of this is basically useless because we don't know the formula for these things here. But I did fill out at least the basic things here. 81 is my long put delta. 34 is my short put delta. I can get $3.28 if I'm not right. If I'm not mistaken. Yep, $3.28 on one short call over the 2666. So my return on investments 12% ROI unrealized profit. So that's not too bad for 11-day trade. So I'm really considering this. But I did find another option to reduce, go down from 90 to maybe 80 something days in August. If I do that, my max profit is 814. I think somewhere, 819, somewhere around there. 819. Um, oh, it changed here, but yeah, but my expectancy is lower than what I would have if I went for the longer leap. So it's definitely helping me make good decisions just doing this, even though it's super time consuming. You have to enter all of these things, but it'll force you to sit through evaluating your trade, even though it takes a little bit of time. I think it's helpful as a beginner itself. This was really helped me too. So the put theoretical value for using the Black-Scholes model for the 190 long put expiring 30 September is 31. I'm able to get it at 26.66. So it's definitely cheaper if we are just going based on the model itself. Same for this 27.91. I am showing 23.64. So the pricing, they're priced cheaper, but of course, this model doesn't um, include all the different variables. I did account for implied volatility for this chain itself, but it's still, it's not like a more of a guide than make sure you're not overpaying kind of deal on that. But yeah, I think I'll go with this 9:30:22. I would like to figure out how to do this though. And so I can start using this template to actually track my put diagonals. Now it'll be 17% utilized and close to 12.5% ROIC if I put in this trade. Yeah, what was my question? I completely forgot. I had a question for you guys. Anyway, um, yeah, I think it'll come back to me later. Unless you guys want to look through something here, I'll. That's what I've been working on. Hello?
So
Oh, sorry.
for
Sorry.
the critical strike or like the adjusted leap basis,
Mm-hmm.
trying to figure that out if it's not calculated as the Shit, why is the equation slipping my mind?
I'm trying to pull that up.
Fine, I'll try to pull it up as well. Um,
Strike. Okay, there we go.
Yeah.
okay, so if it's not calculated as the long call debit and the short call credit, what other things could it be calculated as?
So adjusted long call basis. It should be adjusted long put basis minus short put value divided by short put delta plus stock price. Does that make sense? If I'm just switching out long calls to a short put. Wait, sorry, long put. I should do long put.
Okay. Yeah.
I,
I
does
mean,
that make sense? It does kind of make sense if I just substitute them out, but I don't think that's right though.
yeah, see that I don't think that's right either because I know Eric said that there's more to it, but I don't know if he said what or how much more there is to it.
I thought
Right.
you could just look at the graph profile, and as long as you can look on there and go, okay, I'm not going to lose money if it drops, if it goes too high or too low. I guess if that curve goes up and then spikes way down, um, but
Oh
that
yeah.
but I've never really seen that. I'm not sure.
But that can happen if it's like, wait, sorry. Sorry, go ahead, Todd. Let me try to find.
Because that I think that's the only time you would lose money because the graph is accurate, so it's going to tell you if the if you blast past your short put in this case, then your long put you'll be selling that and still have a profit.
Correct.
So,
That's only because of the long delta is overwhelming the short delta. So the current delta for my entire delta for my trade is 47, close to zero point 0.5 delta. So as long as this is negative 47, as the stock keeps going
yeah.
down, I keep making money. If this changes to something positive, then I'm screwed. If it goes down, my position will start losing money, I think. So yeah, it's negative 47 delta just based on the
But the graph is accurate though, right? Can't you just
yeah.
pretty much always go by the? I think he gave us those formulas, just because he likes us to, understand it. But you can always just look at the graph and go, okay, I'm good. If
Yeah,
it
yeah,
if
that's what
it
I'm
goes too
thinking
low.
too. Correct. Yeah, just the formula helps me here. Let's say, for example, short call lots, right? I have, let's say, it depends when right now it's 1 to 1. If I scale it up and do 2 to 1, then it will give me how many short calls I can sell over my current leaps. So this formula is helpful in trying to maximize your um, profit potential, at least collect as much premium as you can and reduce the cost of buying these leaps at like 26.66, right? So if I add another leap, uh,
It
let's
gets
see,
expensive.
yeah,
Yeah.
yeah, that's
That's the problem with it.
Yeah. No kidding.
what's that, 5,000? Crazy already, and just for 2 leaps. And that's 35% of the total capital if I allocate 15,000 that which is a paper trading account. I don't have that kind of money in my regular account just for one trade, right? So um, I've been looking at other um, what do you call them, tickers. Try to look at this XLK because QQQ has been trading so bad. I can't, like it's in such a good downtrend. It's perfect candidate for me to trade lead diagonal. I mean, put diagonal downtrend like this. The volume profile for 1 year is the line of control is at 366. 6 months more downtrend. 3 months even steeper downtrend. So
Wow.
moving averages are inverted like they are supposed to be, and it's trading below this. 95 IVP, still a little bit more room for it to get, but it's super expensive. 274, one
Yeah.
contract is due. So I'm trying to trade XLK, which is which is a SPY ETF for technology, but their liquidity is dog shit, man. Look at that. There's nobody here. I don't know. And the gap between 29 and 33, that's a huge bid-ask spread.
Yeah.
There's so much slippage that can happen here, and that's only 90 days. I even tried to look at this. I, if you want to, oh, sorry, I got a look here. If you want to, at 80 delta, I can't even get to 80 delta here. So,
Yeah, just do all.
yeah, my computer starts screaming at me. There's too much information. I think this is, yeah, 29.84 delta, so this looks good. If I'm buying this, I'm spending close to 3,100. Yeah, that's my problem with that. It's just not liquid at all. I made some option legs here, but like that. My profit potential is 662 as opposed to 800 if I just trade the, what do you call that, IWM. So yeah, I would prefer to trade the technology sector as a put diagonal, but I just can't afford it.
Yeah, it's a challenge trying to trade in a bear market, betting on things going down. It's just like flips our brains upside down, and I don't know. It's just tough for me.
Yeah, yeah, it
Yeah,
is.
agreed.
It's
I mean,
complex.
one of my thoughts on it, and I'm just kind of looking at it and messing around with it, is using a product called SQQQ. So it's basically the Qs, but it's shorted, and but it's triple leveraged.
Yep.
But 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 you can trade it as if it's going up in a bull run, and you can just kind of watch it. And so for me, I'm looking at it and thinking about, well, maybe doing weeklies on it instead of monthlies, because
So you
it's
go
crazy
long on,
leveraged. Yeah, you go long on it. Well, for bear, because
yeah,
it's backwards. It's against the cues.
right. It's I think it's Q triple Q's inverse, but three times, right?
SQQQ. Yeah.
That's
Oh,
weekly.
that's a good way to still have bullish strategies while
Mhm.
shorting the market.
Right. And then I can just do, do the do the wheel strategy, or you know the
Oh, so you'll
secured
trade a
put.
put, okay.
Yeah, I just do a put whenever I see a good opening. So I've been watching it for openings, but um, maybe at some point I'll do it. I want to pull back first because it's kind of bounced up.
Yeah. It's like it's grouping up here right now. Even the look how steep this thing is, the 9-day um, exponential moving average. But they're in a good position. There's good volume too. The purple volume is the 7-day moving average, which is also peaking higher. Mm, You're trading above that. Yeah, it looks good. Yeah, this does make sense. This I'm comfortable with. Selling the short put as opposed to doing the put diagonal. There's something
Yeah,
missing here. Like,
yeah,
what can we change? Okay, delta ratio is the first thing, right? So I tried to find this in options as a strategic investment for the put side. This is I don't know where he got the 2.1 from. I never asked him that. I just copied it straight from the videos.
yeah.
Yeah.
I think my understanding is, he's trying to create that upward trend, so he doesn't get stopped out with his short call or short put in this situation. So 2.1 gives him that the angle he wants to, and he's probably just came up with it, over the years. That 2.1. That's my guess, and it seems like it's more like if you buy, it's like a three to two ratio. I want to say if you buy three longs, you would use two shorts, and that and you can kind of see on the graph how it gives you that nice angle. It's something like that.
Yeah, yeah, that's
But it
Yeah.
correct.
gets super expensive.
I
Dude,
I
wonder
know.
I wonder why it's 2.1 though instead of just like 2.0. I wonder if that point 0.1
Right.
has to do with like there's a significant difference in there.
good question. I don't know.
So would this straight up be switch it out to number of long puts multiplied by long put delta divided by 2.1 short put delta? I really don't think it's that simple, or it could be. Maybe we are overthinking it. I need to find out where I can. I try to YouTube it. Nobody does it this way. So I can't
Eric,
find
hey man,
anything.
he's an outlier. You know what I'm saying?
You're right. Absolutely right. Uh, that is true. Yeah.
I
If
I
I
wonder.
hope he puts out. Go ahead.
Oh, sorry. I wonder if it has anything to do with puts having a negative delta associated with them.
Correct. I think so. Um, Also, I was reading the because see what's that -40 is the wait that's for XLK. Let me go back to IWM. Yeah, so -47. Um, the higher this is, the better it is for your trade, negative delta. But there would have to be some kind of change in either a plus or minus here. But I think it would follow similar structure. But uh, I'll read more on it. Maybe this week I can figure it out. But like Todd said, I can still go ahead and put this trade on. I think just to check it out because my expectancy is coming out to be pretty good. So even if it's all positive, there's no negative number out of this trade at all, and even the ratio comes out to be pretty good. If I'm honest, so if I'm managing it at 60% profit and 3 times loss, I'm close to 1.81. I can even take it at 70% profit, make it two. Um, so yeah, I'm thinking I'll put this trade on, but I don't know what I'm doing, so I don't know how to track it here in terms of visualizing it in math. But this tells me what is going to happen on this trade. I just need to observe how it moves as the stock moves and how this profile changes because these deltas are going to change every time the stock moves either towards it or away from it, and that'll impact the overall delta of this position.
Yeah.
Yeah, I wish he puts out a video quick on on a put diagonal. That
It'll
would
be
be
something we bring up in the live session on Monday for
yeah.
sure.
Cool. Oh, I took too much of the time. I'll hand it over back to you guys.
Oh,
No,
dude, you're fine.
it's a good question. I guess my thought is after getting it started and looking at the graph and going, okay, it looks like, you know, it's going to work. Then the question is, how do you adjust it as you go along? And my thought is, well, each time you have to put in a new short call or put, then you look at your long one and see how much is it worth, and then you just kind of calculate out, can I do a short without losing money if it goes against me? So that
Correct.
kind of my thought at the moment, because I don't know, all those calculations just confuse me.
Yes, I think you're right. I think this is this is the number that will help you decide what your base is currently at, and how many short calls you can offer on top of that. So I got really comfortable using this, but I didn't take it on a test drive for a call diagonal because the market started tanking rapidly, and I had to change the strategy to put diagonal. But I think you're right. I have to get the numbers in the correct. But so far, just looking at this, if I do increase this, and the profile is going to completely change. Uh, Oh, doesn't make sense. I can't do that? Oh, sorry. Yeah. So if I sell two short calls against one of the leaps, I have such upside and downside risk. So my only profit range is between this and this. It's just to break even. Yeah. So I have a range from 149 to 173. That's the only time I can make profit, and my max profit is at the short strike. So that gets really tough, especially in a market that's moving so far, so quickly. Um, IWM is what, 29 or 25% down year to date, from the highs up in January of this year, 244 to 162. Yeah, so and there's no support here at all. Like I have to go way back to 5-year weekly or even 3-year weekly. Yeah, so I put this price line here because the next shelf is way down here. If it is coming down to this point, that's going to be interesting. And the question then remains, so right now, if I just have one lead against one short call, I'm still used, what is that? Let's see, 17% of my total allocation. If it starts moving down, do I start adding more leaps so I can sell more short calls, try to squeeze out more money from the trade, increase my allocation in the trade as it goes down, and at what level will I stop? Like, all these questions are like completely, I don't even know how to answer them yet.
Yeah, it's definitely more
Mhm.
complicated, you know. And I was just kind of like, well, why don't I just stick with the cash secured puts or um, the cash secured strangles? But the thing is about those leap diagonals, they're just you just make a lot more money with them. If they end right in your favor, you do a lot better.
Yeah,
So it's definitely something good to get down, understand.
yeah, and it's pretty much, if you want to trade direction, I think this is a really good strategy. Especially, look, if I had to cash secure IWM, that'll be 16,000 right off the bat, right? 16.5 for just one contract of a put. So this is still capital efficient. I can This is my maximum outlay. If it's just one contract, that's 2,600. Even if I increase it to two, I'm still 5,000, and I can be more capital efficient in trying to generate unrealized P&L, like 12%. Anything above 10% is good, at least I think so. But yeah, you're right. You can make a lot more money with less money used, especially for a smaller account. Plus, you're
Mhm.
protected, unlike, well, in cash secured put, your cash is securing your put, but it's still a naked put. And this would be considered a spread if I am going like that. And my margin, oh, and that is another thing. What my margin requirement will be if it's a cash secured put versus a put diagonal like this. And it's easier when this is telling me that there's a 45% chance that I can take it out at 70% profit. It'll hit this price level, 561. My P&L will be at 561. I think that was, uh, let's look at that, 561, 561. Yeah, so 162.65. I think IWM can get there, 162.65. Yeah, it's like right there. If it moves even just a little bit, I can cash in on that.
Yeah.
Yeah.
I mean, I always look at like risk reward too. Although you can make a lot more money with these diagonals, you could also you could lose it all. If all of a
Yeah.
sudden the economy started going up and it blasts past your long and doesn't come back down, then that's it. You lost everything.
Yep. That's true.
Yeah. I mean that's true for any directional trade, but
Yeah, Yeah, it'll be interesting. We'll get to bring it up on Monday. At least if there's a video and how to manage it, just give me some confidence on how to proceed with it. But I think I'm still going to go with it. I was trying to put a Kroger trade last week, which didn't work out. I never entered that trade, but IWM put diagonal is what I'm thinking this week.
Kroger's interesting. I had someone tell me the other day that Kroger owns Fry's. It's like, holy cow, that's a pretty major company there. They own Fry's.
The Fry's Electronics?
No, Fry's grocery store.
I don't think we have it out here.
Yeah, I've
Oh,
never heard of that.
okay, never mind. They're all over Arizona. It's my world. Hey, we have Amar Preet. He's in the chat. I can't hear you, Amar Preet. You're there.
Oh, he unmuted his mic. What's going on, buddy?
Can't hear
Still
you.
can't hear you.
Maybe some mic issues.
Can you guys hear me now?
Yes.
Right.
Awesome. Hi, good morning. So my name is Amar. So I'm from Winnipeg, Canada. I've been I'm being a listener all the time. So I'm just started learning about trading. So I thought this might be a good conversation to listen. So I've been just listening all the time.
Yeah, great. Yeah, you have any questions or?
I started a little late, so as a beginner, I have no questions right now. Like,
Cool. Is there
yeah,
is there anything that you're watching or like just overall in the market right now or?
I'm just watching SPY.
Okay, cool.
Yeah, and I seen on TradingView after market, I see there is a green wick. I don't know if like when market opens on Tuesday, it's going to be long or short.
Important question. I guess everyone is trying to answer. That'll be really tricky. It does. There is a green tick
Yeah,
right now.
yeah. It's after market 5:30.
Is there no market on Monday? I didn't know that.
I think it's
There's not.
I think
Oh,
it's
it's not yet.
Juneteenth, a holiday for Juneteenth, maybe.
okay.
Yeah, that's interesting. Did they like implement that this year?
I have no idea. I was interviewing for a job last week, and they said that they're off Monday. I'm like, huh? I was like, oh, okay. All these things are new, man. I don't think it was there before
I
that.
think this year is official holiday for June 10th.
Oh, that's awesome.
Mhm.
Well,
I have so Todd. How about your experience in trading? So I had a couple of times I had chat with Sri J, and as Sri J started, he's a beginner as well. So what's your experience with trading?
Oh, well, I mean that's yeah. So I would say that my first experience was right outside of high school, which was 35 years ago,
Um,
and 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 I decided to implement this one strategy where you put like half your money in the stock market and half it in cash, and then you slowly put more money in, and then this was like in the middle 80s, and then the whole market just blew up and crashed. But because I implemented that strategy, it's like I came out okay like within a year. So that was like my initial. And then after that, I was like, I don't want to mess with this. So I just saved money, 401k, and just kind of let it save up and not mess with it at all until about January of this year. Well, January 1st. And so that's when I really started jumping in head first as much as I can, and I put a lot of hours into it. But um, yeah, that's really it.
That's
Um,
cool. So I started as a crypto guy, just as I've been just uh, keep on investing small amounts. I've been just observing how does market react. So initially, when you invest in crypto, you never. It's like a gambling. You never win. It's
oh
almost
yeah,
lose, lose, lose.
yeah, yeah.
So I thought like, okay, so I'm a full-time business analyst. Uh,
Huh.
so so I thought like I wanted to do something beside my full-time job. So because inflation